Click the bell icon to get latest videos from Ekeeda.
Hello friends, we'll be going through certain details of preparation of final accounts. In the previous video, we have learned about how a trading account is prepared. In this video, we'll understand how a profit and loss account is prepared, what are the items that are covered under it, and what are the items that will be excluded from it. Let's go ahead and find that thing out. So when we speak about preparation of final accounts, we ideally speak about preparation of three statements. First being trading account, second being profit and loss account, third being the balance sheet. Now that we have already learned how a trading account is prepared, how gross profit or gross loss is accrued or probably found out, now these things will lead to further preparation of profit and loss account. As you know, if the question says or if the question figures out that there is a gross profit or gross loss which has to be further transferred to profit and loss account, then which will lead to preparation of profit and loss account. Once this thing is prepared, you use either the operating expenses, operating incomes, non-operating expenses or non-operating incomes, and then you derive whether you have a net profit or net loss. Once this thing is prepared, this net profit or net loss as per the situation is further sent to balance sheet, which will be covered under the capital category under reserves and surplus subcategory. Once this thing is done, we further go ahead with preparation of balance sheet. Now, the balance sheet will be the last stage of preparation of final accounts. This is something that will be communicated to the users. So before that, let's understand how a profit and loss account is prepared, what are the items that are supposed to be mentioned, and what are the items that are supposed to be excluded from them. There are certain adjustments, there are certain entries that you need to understand. So we'll be going through with these details in depth. I have prepared a pro forma invoice here, rather a pro forma of all these statements. We'll be preparing a recap, rather we'll go ahead with the recap of preparation of trading account, which will give you better clarity on what items are supposed to be covered, how these items will be further moved to profit and loss account, and how the net profit and net loss will be accrued or found out. Let's go ahead and find these things out. So, if you can see, the pro forma invoice which has been prepared here has details of what are the basic items that are covered under trading account. We have opening stock, we have purchase, of which returns will be subtracted from it. Now the balance which will be left will be the net purchases. We have direct expenses which have been mentioned. On the credit side, we have sales, out of which returns will be subtracted and will have net sales in hand. After which we'll either have one of the situation whereby we'll have gross profit or we'll have gross loss. Now, according to the question or whatever details have been mentioned, so either will have, as per the situation or as per the question demand, will have either the gross profit or gross loss. Now, if there is gross profit, that will be moved to the credit side of profit and loss account, or if we have gross loss, that will be moved to the debit side of profit and loss account. Now, under profit and loss account, we'll have certain items. We'll have operating expenses, we'll have non-operating expenses. We'll have operating income, we'll have non-operating income. Now, all the items that are covered under profit and loss account will be categorized under these four categories itself. So, we'll have brief knowledge about what are the items that are covered under profit and loss account. Rather, the four categories that we have: operating expense, operating income, non-operating expense, non-operating income. So, when we have or when we need to deal about all these expenses or all these incomes, all the operating things or all the operating activities will be further classified under profit and loss account. As you know, trading account is always be dealing with trading accounts related to factory things or manufacturing items. However, when we speak about profit and loss account, all the day-to-day office activities will be recorded in profit and loss account. The net result, that is the net profit or net loss, will be further transferred to balance sheet as per the question's demand. Now we'll further go ahead and understand what are the details that are required when it prepares or when we prepare the specific profit and loss account. Let's go ahead and find that in the next sheet. So before we start with preparation of profit and loss account, let's do a small recap, or rather let's do a specific sum that we have when it comes to preparation of trading account. When we talk about preparation of trading account, I have mentioned down a sum here. Now, we'll go through each item which has been mentioned in the sum and we'll further prepare the trading account, which will help you analyze how the gross profit or gross loss is transferred to the profit and loss account. Let's go through the sum first. So you have to prepare the trading account of Messrs. Prime Product, and that is for the year 2013-14. You have opening stock which has been mentioned in the question as rupees 50,000. You have purchases and return inwards which has been mentioned in the question as amounting to rupees 1,10,000 and 5,000. That means the purchase that was made was for rupees 1,10,000. The return inward that was done was for rupees 5,000. Now return inward is something that has been sold back to you or given back to you. So when is the case, that means you have a return inward. Return inward is something that will be done when you sold out or probably when you give out certain items ahead. So if I have to say, that means something is coming back. For that you have to do sales. So return inwards is nothing but sales return. Sales has been mentioned in the question as rupees 3 lakh, and return outwards has been mentioned in the question as rupees 7,000. Now, as we say that return inwards is nothing but sales return, that means similar to that or in similar lines, we'll say return outwards is nothing but purchase returns. That means the goods that you have purchased and are certain defects in it will be sent back to the purchaser or probably the purchase item from whom the vendor we have procured the things for. So if we have a vendor of whom we have purchased certain items and there are certain items or certain value of goods which are defective, we'll send it back to the vendor. Hence, return inwards and return outwards are nothing but sales return and purchase return. We have factory rent mentioned as 3,000 and wages which has been mentioned as 40,000. So these are the items that have been recorded, or probably these are the items we have mentioned in the question. We'll further go ahead and prepare the trading account for this specific Messrs. Prime Product Limited. Let's go ahead and prepare that thing. So if you can see that the pro forma is similar to the actual image that we have created here. Debit items amount, credit items amount. All the expenses and loss will be mentioned on the debit side. All the incomes and gains will be mentioned on the credit side. We'll further go ahead and classify which of these items are a part of debit side and which of these items are a part of credit side. Let's go ahead and do that thing. So if the first option that was taken, that is opening stock, what was the amount that has been mentioned here? So the amount that will be mentioned on the debit side. So if you have opening stock will always have a debit balance. Hence it will be mentioned on the debit side of trading account. Once opening stock has been mentioned on the debit side of the account, the next item that was mentioned was purchases rupees 1,10,000. Now again, purchase is an expense that you have made. Expense which was necessary to create specific goods that you sell out. So purchase being an expense will be recorded on the debit side of the trading account. Let's record that item. So we have recorded purchases as 1,10,000. If you see, I have mentioned that in the inner column and not in the outer column, rather not in the final or net value column. Now the reason that I've mentioned it here is because I need to subtract certain purchase returns that were a part of this. If you know there were returns or probably return inward and return outward, the terms that were a part of this question. Now when we talk about preparation of net purchases, net purchase value will be something that has been mentioned or that will be mentioned in the outer column of this specific statement. So how much were the returns that were mentioned in the question will be subtracted from this specific purchase of rupees 1,10,000. So let's figure out how much is the amount and how much is supposed to be subtracted. So if you see, return outwards, that means something which has been sent out will be subtracted from the purchases. Sent out comes only in question if you have bought something. That means if you have purchased something, and only then you will be sending out those goods if there are certain defects in it. That's why 1,10,000 as purchases minus return outwards, which will be for rupees 7,000. The net value will be reflecting in the outer column. Let's go ahead and find out how much is the net value that is supposed to be recorded. 1,10,000 minus 7,000. That means a total of 1,03,000 will be mentioned in the outer column. That is the total of net purchases done. After this, we'll further go ahead with preparation of trading account. Let's go ahead and complete the debit side itself first. On the debit side, we have another item which has been mentioned as factory rent and wages. Now these two items are again expenses. Hence we are completing the debit side first and then we'll further go ahead with preparation of credit side of trading account. So factory rent and wages will be mentioned on the debit side of trading account. Let's go ahead and mention those things or those items on the debit side itself. Now If you speak about factory rent or wages, you will further mention these two things on the debit side, as there are no changes or no accidental or probably any kind of information, additional information rather, that has to be added to these things. Hence, the final amount will be mentioned on the debit side itself, that is in the net column or the outer column itself. You don't have to make any changes in it. After these items being posted on the debit side, we'll further go ahead and credit the items that are supposed to be recorded on the credit side, that being sales and sales return. So we'll figure out how much value is the sale and how much is supposed to be subtracted from sales return or as a part of sales return from sales. Let's go ahead and do that part. So when we talk about preparation of trading account, now that we have mentioned sales and sales return in it, the sales item, probably the sales amount is rupees 3 lakh and the sales return which is amounting to rupees 5,000. Now when we talk about the final or net sales, we'll be crediting this amount on the outer column which is for rupees 2,95,000. So the total item 2,95,000 has been mentioned on the credit side. I'll highlight that part. So if you figure out, all these items have been already listed now. The next part is to figure out whether we have gross profit or gross loss. Let's calculate the total and figure out whether we have gross profit or gross loss here. So if you look in this specific pro forma, we have credit side amounting to rupees 2,95,000 and we have debit side amounting to rupees 1,96,000. That means the difference is the gross profit. So we have gross profit in this question. Now the amount that will be mentioned here will be the difference between the credit side and the debit side. So 2,95,000 minus 1,96,000 is the amount that will be credited or probably will be shown on the credit side of profit and loss account. Hence it is being shown as a debit item here. Now when we talk about gross profit or gross loss, this is the amount that is supposed to be carried forward in preparation of profit and loss account. We'll further go ahead and write down that amount in form of X because we don't need to calculate that. It is very simple for you to calculate. So we'll be just mentioning it, or we'll probably further going ahead with cross marking these things. Now, once you go ahead with cross marking these things or probably mentioning that amount, we'll further go ahead with preparation of profit and loss account. Now, this cross marked amount will be further a part of preparation of profit and loss account. This gross profit will be shown on the credit side of profit and loss account. We'll further go ahead with preparation of pro forma of profit and loss account, which will be on the similar terms as the trading account has been created. We'll have the same items as mentioned in the trading account. That means debit side items, credit side items, internal amount column, external amount column for both the sides. The same pro forma will be used for preparation of profit and loss account, and the only name that will be changed here will be the name on the account. That means we either have a trading account first and then we prepare the profit and loss account. So only name change will be mentioned here, no other changes, and only the items that are supposed to be covered under it will be a part of it. Now let's further go ahead and understand what are the items that are supposed to be covered in preparation of profit and loss account. Before we go through the preparation of profit and loss account, let's understand what do you mean by these two technical terms that has been mentioned here. The first being cost of goods sold. Now, as the name states, cost of goods sold. What is the cost or what is the manufacturing cost of the goods that have been already sold out? So if you have made worth sales of rupees 10 lakhs, that means there is a certain cost behind that 10 lakh. 10 lakh is something that you have earned, something which will form as a part of your revenue. Now to generate that revenue or to earn that revenue, how much is the cost that has been paid or expensed that has been made to figure out the sales of rupees 10 lakh or to earn that revenue of rupees 10 lakh. Now this specific amount will be called as cost of goods sold. Now when we talk about cost of goods sold, we need to figure out certain things. There is a specific formula for it. We'll further go ahead and decide what are the items that are supposed to be covered when it comes to cost of goods sold. So when we talk about cost of goods sold, that is the amount that is supposed to be mentioned down here. Now we'll go ahead and check what are the things that will be covered under it. Let's go ahead and find out that part. To ask you before going through of cost of goods sold preparation, we need to understand, or we'll ask you certain things, or we'll ask you certain questions. Where do you record sales? That's correct. You record it on the trading account credit side. Where do you record all your expenses related to those sales? That means preparation of trading account includes all expenses that have been paid for continuing or probably producing those items which are supposed to be sold out. Now where do you record these things? That's correct. You record them on the debit side of the trading account. So cost of goods sold, as which has been highlighted here, will be a total of opening stock, add purchases in it, that means the net purchases, add direct expenses in it, and subtract closing stock. So cost of goods sold, which has been a part or probably which is supposed to be mentioned in this specific profit and loss account, will be nothing but opening stock, add net purchases, add direct expenses, and subtract the closing stock from it. If you want to remember this, you can remember this as a formula, because this will be one of the question which will be asked for you in your exams. So we have mentioned these things. Now we'll further go ahead with the second technical aspect or the second technical term that has been mentioned here. Let's go ahead and figure that out. Operating profit. What do you mean by operating profit? There is a specific formula that has been mentioned here. Let's go ahead and understand each of that specific thing that has been mentioned here in detail. So when we talk about operating profit, we talk about net profit, add non-operating expenses or incomes to it, and subtract non-operating expenses. Now when we talk about operating profit, this is the basic formula that you will be using. Operating profit also has a different name that is termed as EBIT, earning before income tax. Hence, any tax which has not been deducted from any kind of profit that has been earned is known as operating profit. Once you deduct tax from that profit, you will have net profit which will be usable for dividend, or probably which will be usable to divide or probably give out any kind of items that you have to, or you probably have to share it in the balance sheet. So when we talk about divisible profit, that means the actual profit which has been found out or regularized after deducting the tax from it. So operating profit is something which is including tax, that means the tax hadn't been deducted from it, and the net profit is something which is after the tax deduction. So when we talk about tax deduction, we'll have further details in it when we further go ahead with preparation of complex sums in this. So operating profit is nothing but EBIT, earning before income and tax, and this is the formula that has been mentioned for it. So we'll further go ahead with in-depth details of what all items are covered under operating expenses, non-operating expenses, operating income, and non-operating income. Let's go ahead and discuss that in detail in the next sheet. So the first item that we have to discuss about is operating expense. Now what do you mean by operating expense? The word operating itself describes or probably tells you about more details on this. Operating is something which is related to your day-to-day activity. Day-to-day activity, that means something which will go on every now and then. So when we talk about day-to-day activities, that will be a part of operating expense. They have given certain examples here. Let's go ahead with each and every example. Some of the items that has been mentioned is payroll. Payroll is nothing but the salary that you provide. Hence, that is a part of operating expense that is required for your office to function, for your employees to be paid on time, so that they can give out the output for you and they can perform the job for which you have hired them. So payroll or salaries which are provided is a part of operating expense. Now, when we talk about any other item that has to be covered in it, it may be like anything which is related to travel and transportation. So travel and transportation which is required for office purposes will be a part of operating activity, and hence it is mentioned as a part of operating expense under profit and loss account. To give you other items which will be a part of this thing, let's go ahead and find out each and every item in detail. Sales commission paid. Now this thing relates to the commission that is paid to all your vendors for doing the sales. So now that you're a manufacturing company, there are certain sales that you do. To promote those sales or to advertise those selling items, or probably the marketing strategy which is supposed to be used, you give out certain additional commission to your agents. Now this is the commission that is an expense for you for procuring or making those sales. So while you make those sales, and the additional item that you give on sales as an added incentive so that you can enhance your sales and further increase your income, that is the commission that you provide, and hence it is your operating activity. Hence it is an expense, and under consideration of that part itself, it is mentioned on the debit side of profit and loss account. Now these are the items that are covered under operating expense. So if you know, you have given a gist of all these things, and you will be able to classify what are the items that are supposed to be covered under this. Now we'll talk about the next item or the next piece of category under which certain different items will be a part of it. So we'll be studying about all the details which are a part of it. Now, when we talk about anything which is related to operating expense, we'll further deal with what are the items that are supposed to be dealt with in terms of operating income. Now, operating expense, operating income will be something which is related to anything that has been a part of your daily business activity. Now, daily business activity will include anything which is related to your sales, anything which is related to your expense, the daily thing that is required to let your business run, to let your business function in an efficient way. Now, let's go ahead and understand which is the next category that we have to discuss in detail. We have dealt about operating expense. Now we'll deal about non-operating expense. If you know, operating is something which is related to your daily activities. So what will non-operating be? That's correct. Non-operating will be something that is related to business. However, it is not a part of your actual business. You don't do business because of that specific activity. It is just an additional expenditure over and above your operating activities. So if you remember, just to give you an example, we'll take Mr. A, who is a shoplifter, or rather we'll call him as a person who buys unnecessary things with his hard-earned money. So, for example, he has purchased a house, and for renovation of that specific house, he requires certain curtains, certain infrastructure, or probably we can say certain cutleries for his house. Now, he ended up buying a car as well. Was that necessary or was that a part of his business? No. The part of his business was to renovate his house. The main mission was to renovate his house. So, is car a part of his business or probably a part of his renovation of a house? It isn't. Hence, the part of renovation or any activity or anything that has been purchased as a part of renovation of house will be operating expense. Now, this car that has been purchased by him will be a non-operating expense. Hence, any item that has been paid for any kind of lawsuit, maybe, as lawsuits is not a part of your business. You don't get lawsuits every now and then unless and until you're a legal firm. So anything that has been dealt in terms of any additional activity which is not a part of your business will be non-operating expense. We'll go ahead and check further examples that has been shared with us. Two examples have been shared here: interest payment and expenses related to any lawsuit. Interest is something that you pay. So if you have capital funding, if you have investment from other lenders, or they have invested in your company, you give out interest to them. If they have given you loan, you give out interest to them. So the interest that has been paid is not your actual activity, is not your business. Hence, it is termed as non-operating expense. Similarly, the next item that has been mentioned here is expense related to any kind of lawsuit. So when we talk about lawsuit, supposingly there is any kind of claim that has to be made, or the expense that you have made for making that claim is something related to lawsuits. So the expense that has been made is under the category of non-operating expense. So I hope this is very clear when it comes to operating expense and non-operating expense, and you will be able to justify which items fall under the category of operating expense and which items fall under the category of non-operating expense. So now that we have learned about how expenses can be categorized under operating and non-operating under profit and loss account, we'll understand how income can be categorized as operating income and non-operating income. Let's go ahead and make that in the next sheet itself. So now we'll be dealing with operating income and non-operating income. Let's start with operating income. Now the term operating, you're very familiar with it. Operating is something which is related to day-to-day income or day-to-day expense or day-to-day activities. Now when we talk about operating income, we are actually talking about the income that we have earned due to any kind of sales or revenues that has happened due to the business that we run. So if we are selling out some goods or any product or any service to our clients and we get certain income from it, that is our operating income. So as I've mentioned in the definition, I'll read out the definition for you. That will be very easy for you to understand. Let's go ahead and check that thing out. Now this is termed as profit realized after deducting operating expense, which is depreciation or cost of goods sold. Now depreciation is just an example. The expense that has been made or operating expenses, as we have learned in the previous slide, any operating expense, if you subtract that from operating income or probably the total income, whatever has been left is a part of operating income. That means that amount is the operating income that you have. So when we talk about operating income, you just have to subtract total income. That means the expense that has been made in terms of operating activities, you have to subtract that amount from the total income. The balance that will be left is termed as operating income. Now let's go ahead and understand what are the non-operating incomes. Now non-operating income, or basically the term non-operating, relates to anything which is not referred to your business. That means if you have a land and you sell out that land, if there is a gain on that part, that is non-operating income. If you have certain investments and you sell out that investments, you gain on that part, that is non-operating income. If you have a specific gold with you or a gold bar with you and you sell out that gold and you have gains on that, that is non-operating income. Now, if I've given you these three examples, if you can see in these three examples, none of this is your business. Hence, anything which is related to any kind of income or it fetches you income out of non-operating activities, that is termed as non-operating income. So I hope this gives you clear clarification of what do you mean by operating expense, non-operating expense, what do you mean by operating income, and what do you mean by non-operating income. Let's further go ahead and understand what are the details that have been mentioned in the next slide. So I've given you a pro forma of profit and loss account. Now, operating expense, operating income, operating expense and operating items, anything related to that have been mentioned in here. Anything which is related to operating expense or non-operating expense will be mentioned on the debit side. If you can see in the pro forma, all these things have been mentioned on the debit side. Anything which is related to income, let it be operating or non-operating, will be mentioned on the credit side of this specific pro forma. Now, we have mentioned few more topics here, that means additional items both on the debit and credit side. These are the adjustment entries that will be a part of your question. Now, you won't just have trial balance given there when it comes to preparation of final accounts, you will have certain adjustments as well. Now, these adjustments will form as a part of trading account as well and as a part of profit and loss account, which we'll get to know once we prepare the balance sheet and once we further go ahead with preparation, or those adjustments are supposed to be incorporated. So when we talk about this specification of any kind of profit and loss account, we either have net profit or net loss. If the credit side of this specific pro forma is on the higher side as compared to the debit side, that means you have net profit. Vice versa, if you have debit side of this specific pro forma on the higher side as compared to the credit side, you have net loss. This specific item, that is either the net profit or net loss, will be further moved to balance sheet when it comes to capitalization or categorization of any kind of profit or loss under reserves and surplus. If there is profit, it will be added to the capital. If there is loss, it will be either shown on the asset side or it will be subtracted from the capital or the reserves and surplus. As per the question and as per your choice, you can mention that thing under balance sheet. Once the balance sheet is prepared, your users are supposed to be communicated with these reports after the final audit has been done on this. So this is how the specific profit and loss account is prepared. Now we'll further give you certain items and certain expenses. You classify them whether it will be a part of debit side of the profit and loss account or credit side of profit and loss account. I'll be giving you certain items now. You note down those items and further we'll classify them one by one whether they form a part of operating, non-operating, or whether they form a part of expense or income. Let's go ahead and do that part. So as I've mentioned down or probably jotted down certain items for you, we'll further go ahead and classify the first part, whether it is a part of trading account, whether it is a part of profit and loss account, and if it is a part of profit and loss account, whether it is operating or non-operating. Now the first thing, factory depreciation on assets. Now assets that are being purchased for the production utilization or for production of items that are mentioned in the factory. Now tell me whether this will be a part of trading account or whether this will be a part of any kind of profit and loss account. That's correct. This will be a part of trading account because this is a factory depreciation, and further adjustment will be made towards asset account of that specific asset which has been purchased for production unit. Now this depreciation will be a part of trading account. Now the second item, let's go ahead on the second item first. Depreciation on office infra. Any infra that has been purchased for the purpose of utilization in your office will be depreciated. Now this specific item is either a part of trading account or profit and loss account. Now this specific item is either a part of trading account or profit and loss account is something that we need to decide. Now anything that is related to office will be always a part of profit and loss account as it is not related to factory. Hence the depreciation on this part will be a part of profit and loss account. Rather, you can say that any depreciation which is related to office items will always be a part of profit and loss account. Let's go ahead on the next item here. I've highlighted 3 items for you: purchases, wages and salary. Now purchases, as you know, is something related to purchase of stock material. So purchase of stock material is always a part of trading account. Hence it will be mentioned on the debit side of trading account. When it comes to wages and salaries, there is a catch here that you need to understand. If the question of the trial balance states wages and salary, it will be a part of trading account. Let me write it down for you. Now, if you see wages and salary, salary and wages both have been mentioned. If the question states wages and salary, that means it will be shown on the trading side or probably the debit side of trading account. However, if the question states salary and wages, it will be shown on the debit side of profit and loss account and not on the trading side. Now, the catch here is that if wages has been given the first preference, that means it relates to factory wages. That means items related to factory, and factory items are always recorded under trading account. However, if salary has been given first preference, that means the salary is provided to employees working in the office. Hence, salaries are always a part of operating activities, which will be a part of profit and loss account. Hence, keep an eye on any of these items and look which preference has been given, whether it is wages or whether it is salary, and according to that make a decision of whether this item has to be posted in trading account or this item has to be posted in profit and loss account. Let's further go ahead and understand which are the other 2 items that have been mentioned here. Cost paid towards freight and cost paid towards commission, both are expenses for us. Both are operating activities. Now, when we talk about any kind of items which is paid towards freight, that means it has been paid for any item which has been purchased or the delivery has been made to your factory or your manufacturing unit. Hence, the freight that has been paid for any kind of goods, items that has been purchased and delivered at your manufacturing unit will be always recorded under trading category or trading debit side. However, the commission which has been paid is an expense for enhancing your sales. Hence, that will be a part of profit and loss account. I hope you get the difference when it comes to operating expense and trading expenses. Now let's look at the last item which has been mentioned under classification. Interest on investment. Is investment or probably investing into things your operating activity? No, it isn't. Preparing things or manufacturing goods is something that what you do. Now, when the question states that preparing thing or manufacturing goods is something that what you do, and despite that, if you have made certain investments and if you are getting interest on that specific investment, that will be a non-operating either expense if you have paid on it or income if you have received that thing. So, non-operating expense and income always form a part of profit and loss account. Hence, this specific item will be a part of profit and loss account. Rather, in this question, we'll assume that interest on investment is received or rather earned. So, profit and loss account will be credited with that specific amount. So, this is how you classify items under the categorization of operating expense, non-operating expense, operating income, non-operating income, trading expense and loss, trading incomes and gains. This is how you will be preparing trading account, profit and loss account, and you'll be further sending the net profit or net loss into the balance sheet as per the question demands or as per the answer comes out to be. So this is what I wanted you to understand when it comes to preparation of profit and loss account, and this is the pro forma statement that you need to follow when it comes to preparation of profit and loss account. Thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.